Hey, what's going on? Scott Taylor with San Diego Real Estate Hunter.com. In this video, I want to break down the 5 major mortgage trends that I am seeing right now on the ground and for my clients. Now, don't forget, I'm licensed in the state of California to do real estate. I'm licensed in the state of California to do loans. And primarily, I work in California, in San Diego, for doing those real estate and mortgage clients. So I'm seeing a lot of different trends. I'm filming this coming into about mid-July. Obviously, we know a few things, right? We know that we're in the midst of COVID-19. Again, we don't know if it's the start, the middle, the end. We were in lockdown. They opened up a little bit, and now we'll be going back to lockdown, in my opinion, on and off at the very least until the elections, right? We know that we have the elections this year as well. Always major trends are happening. We know that schools, specifically in, I think, San Diego and LA, I'm sure the rest of California will follow suit. Schools will be going back into session where kids go to school at the end of August like they have. So we have a lot of different things going on. So I want to do 5, or actually I'm going to do a bonus. I'll do 5 and a bonus. Woo! Major trends that I'm seeing right now. So let's get right into it. So trend number 1, there's access to all the different loan types that I've had previous to COVID-19 until right now. There were some disruptions when COVID-19 and all the lockdowns were kind of first starting happening. Obviously, the unemployment rates have skyrocketed, so some of the access to the program. So right now specifically, I still have access to 103% financing up to a $725,000 sales price. Now this is pretty huge, and there's links below this video, by the way, and show notes that you can get some more information and click some links to get some more information. But this is huge because it was up to $725 sales price up until COVID, and then it dropped because of market turmoils, and then now it's back up to a $725,000 sales price. So if you're going to do down payment assistance, you know, I always laugh. People say things like, hey, I'm going to wait until the market crashes, and I'm going to get all the information right now for down payment assistance, and then when it crashes, I'm going to take advantage. And I'm like, okay, if you were going to loan money and the market crashed, as you say, would you give somebody 103% financing? Of course not. You need them to put down money. You need better income, better assets, better credit scores, etc., because it's higher risk. So if you are going down payment assistance, I urge you to act now, because who knows what tomorrow is going to bring. Okay. We still have access to 0 down VA loans. The great things about the VA loans in 2020 is that you have no sales price limit. So as long as you qualify, you're a past or current veteran, definitely talk to me, because those are still going on. We have access to the 0 down USDA loans as normal. Don't forget, in San Diego, if you live in the countryside, for some reason, Fallbrook's considered country, but Fallbrook, Ramona, Julian, Campo, any place further out, Palomar Mountain, etc. It's address specific. You get access to 0 down home loans, okay? Of course, we still have 3% down conventional financing up to a $725,000 purchase, up to a $525,000 purchase price. 3.5% down financing for an FHA loan up to a $725,000 sales price. A 5% down super conforming loan. So don't forget, super conforming. So conforming loan, just a little bit bigger. Why they have these stupid names, I don't know. But we have these stupid names. So if you're doing a $525,000 sales price up to about a $725,000 sales price, that's super conforming, 5% down for that. Then anything over that $701,000 loan amount or $725 purchase price would be considered a jumbo loan. Now, jumbo loans, just so we're clear, because I get so many questions about that, calls, emails, text all the time. Hey, Scott, I wanted to get a jumbo loan. What's the minimum down? Jumbo loans are outside the box. So anytime we do, VA, USDA, Fannie, Freddie, etc., basic stuff, which is backed by taxpayers, right? That's why I always said the U.S. is the world's largest socialized real estate market. Different story for a different day. Those are pretty cookie cutter. We get instructions. Here's what we need. Boom, boom, done. So I'm approved with something around 30 to 40 different wholesale lenders. Each of those lenders, if they do jumbo loans, those jumbo loans are bought by investors, right? Hedge funds, wealthy clients, etc. So each of those investors has very specific guidelines, and it changes daily, like literally daily. they have guidelines of what those jumbo loans need. So, I do have things as low as 10%. If you're going to jumbo loan, I would probably keep it in your mind that you're probably going to need something around 20% down. Again, it depends on your down payment, depends on your credit score, depends on your debts, depends on your income, depends on how much liquidity you have, or how much money you have in stocks, bonds, mutual funds, bank account, etc. Something that just happened. Wells Fargo. Everyone's heard of Wells Fargo. They are still doing jumbo loans, I believe, at 20% down. As a for instance, any client that wanted to get a jumbo loan had to be a client with them. You have to have an account with Wells Fargo, and they raised the liquidity, the amount of money that you have, from $250,000 to $1 million. To $1 million. So that goes to show you how drastically things change, even with the major banks or the major lenders. Now, luckily, I have wholesale lenders where we don't need $1 million in liquid assets to get a jumbo loan, but I wanted to use that as an example to show things are drastically different for jumbo loans, so it varies. Okay, cool. Trend number 2. So the rates are I always hate this rate talk, but everybody, I guess, wants to know rates, because it varies so much, depends on deal structure, etc. But the rates are trending down as of now, right? I'm sure to make the video, they're going to be trending up, and hey, Scott, you lied, or you didn't know what you're talking about. But the rates are trending down, especially if you want to go borrower paid on your loan versus lender paid. So don't forget, I've done videos. There's four ways to pay closing costs. But anyways, if you go lender paid, that means that the lender that you're going to qualify at one rate would do your loan at a different rate, right? There's that gap. It's called a lender rebate. You get money. That money pays your closing cost. That was larger before COVID-19, and they've squashed that a little bit because it's higher risk for the lender, obviously. So now rates are so low because more of the loans are borrower paid, or they want the borrower to get a lower rate to pay a little bit more in closing costs out of their pocket versus getting lender rebates. And it's very interesting because I have rates that start at 2.25% for V8 loans for a 30-year fixed. But it's interesting. I have a lot of clients that we go with the FHA, and there's really not too much different in a lender rebate if we're to go at 3% or 3.25% and at 4.25%. So it's really one of those things where if you're looking for a low rate and you're looking to purchase or looking to refi, even if you did a refi a year ago, you'd be shocked at the type of rates that I can get you. So please talk to me if you're looking for those lower rates. But trend number 2 is that rates are trending downward as of now. Trend number 3. So we still have very little access to aggressive loans that were available from 2001 to 2007. Things like, and I was in the market at that time, and I personally loved these loans if clients understood what the loans were. But things like stated income, stated asset, no income, no assets, pay option arm, neg am loans, etc. Those are a little bit higher risk loans that we had from 2001 to 2007. So what's happening now? VA, it's either 15 or 30-year fixed for the most part, but VA, FHA, conventional, all these types of product, USDA, even down payment assistance, we get a loan that's either FHA or conventional. So for the most part, most people are going 15 or 30-year fixed. So one thing that we're also seeing is that people are staying in their homes longer. Trend number 4. So in these loans, kind of to piggyback on trend number 3, and in these trend number 4 loans, and it hasn't changed, which is awesome, there's no loan gotchas in these loans right now like we had at that time. At the time, we had things like prepayment penalties. We had adjustable rate mortgages with short fixed terms. We had abnormally large lender fees, such as discount points and loan origination and loan rebates. We have some of those things now, just not nearly as much as it was before. So let me give an example. What was very common during that time, and why now is so much different mortgage-wise than then, is like you might have a 30-year loan, right? Had a lot of clients, 30-year loan, but it was only fixed for 2 years, right? So then at year 2, guess what? A lot of these lenders gave borrowers 5-year prepayment penalties. So you knew after 2 years you're going to have to refi. So then you got hit with the prepayment penalty, and then you had to refi and get another loan or sell, or just your loan was going to be adjustable. So this is why there was a lot more buying and selling during that period. A lot more people got out of the market and in, or bought a lot of different things. So now with 30-year fixed and 15-year fixed and more clients having those, we're definitely not seeing as many homes being bought, sold, exchanged, etc. So trend number 5, and this is a very big one, because a very common thing, of course, unemployment rates are off the charts, largest they've ever been in U.S. history. And we know those are bogus numbers too. The largest in U.S. history, not even far, especially, or like not even close, especially when you consider things like, self-employed people, Uber, Lyft, all the different gig economy, all the different things going on. There's no question. San Diego, largest unemployment rates in San Diego history. Here's the caveat, and why everyone's like, oh, Scott, the market has to crash. You have no idea what we're talking about. I hear you loud and clear with the unemployment. Here's trend number 5 that we're seeing, and I just read an article not too long ago, this week, I think, where something like 33% of all homeowners did not make a payment in July. And you're going to say, Scott, it's going to crash immediately. It's going to crash. Here's the caveat. More and more homeowners are taking advantage of not paying their mortgage, right? Each month, and that goes back to the principal. They don't have to pay, and then they're tacking it onto the end of the loan. So let's say they're skipping 12 months. All that's happening, obviously, the principal and interest, or however they're doing it, case by case basis, goes on top of their balance. So their balance is growing, but they're not being evicted. It's not damage to their credit or anything. And then all they're doing is tacking that onto the end of the loan. So this is causing fewer people to be selling, because they're like, well, if I can stay in my home for 6 months, 9 months, 12 months, however long it's going to be during a time of uncertainty, and I don't have to pay, then I'm going to stay in my home. So this is another reason why inventory is so low. I'm not doing real estate on this one. I'll do it on another video soon. But one thing, up in 2008 plus or minus, there was something around 30,000 homes for sale in San Diego. As I'm taping this, there's less than 4,000 homes for sale. Homes, townhomes, condos is what homes, townhomes, condos, multifamily. Sorry, I forgot. So we have 80% less inventory today than we did then. Okay, bonus, woo! And trend number 6, and I'm going to end it on this one. I appreciate you watching this far. Bonus and trend number 6 is non-QM loans are still very much touch and go. So we obviously know about, down payment assistance and FHA, VA, and USDA and conventional, etc. We have loans outside the box too, right? If we use bank statements, or for some self-employed people, or things outside of that box are still touch and go. Again, those are like jumbos, the non-QM products, because those are investor, and it depends on each wholesale lender. So those are very, very touch and go even now. Definitely, right when COVID started happening in San Diego, let's just say mid to end of March, that's when a lot of lenders, even that did non-QM, closed up shop permanently. And then some of them came back, or some of them still offered or are offering those products now. So, definitely if you're non-QM, that's one of those things that's touch and go. So I wanted to end it there. Thank you so much for watching this video. And to not sound salesy, I want to be as perfectly clear as I can. The most important thing always for the mortgage markets is to take the information that you have when you have it. People always want to plan and prepare 12 to 18 months in advance. I totally get it. We all have goals and dreams and aspirations and things that we want to do, and we set aside things. But do you think things will be the same in 12 to 18 months as they are right now? Who knows, right? Largest unemployment rates in U.S. history, in San Diego's history, in California's history. Tons of people fighting for unemployment. They can't get it. They can get it. Who knows what's going to happen with this COVID-19, COVID-20, whatever it's going to turn into? Who knows what's going to happen with the elections? Will it be Trump? Will it be somebody else? Are we going to go in lockdowns? Is it going to be a martial law? There's a lot of unknowns. So planning for something that you don't know that's going to happen 12 to 18 months from now, to me, seems silly. Made sense maybe years in the past when there was nothing going on in the next several years, potentially. Right now, it's not like that. If you are looking to buy a home, especially if you need down payment assistance or low downs, contact me, get on the ball now. Who knows? Market changes, there won't be down payment assistance. They're going to want more than 3 or 5% down, and you will be out of luck. Don't think about, oh, what's the rate today, or maybe not today, maybe tomorrow. If you're going to do it, my suggestion, take the information that you have today and do it, because these programs change. All right, that's it. That's my sales pitch. I'm signing off. Of course, if you have any comments, questions, concerns, shoot me a call, email, or text. As always, go to my main real estate website, san diego real estate hunter.com, or apply online in 15 minutes or less at scottsloanapp.com, or look below the video for more links. And thank you so much for watching the video.